Hey there, it's Trisha with Easy E-mini Trade, and this morning I'm just going to go over a little bit on using the market profile. On Wednesday, October 30th at 4 p.m., I'm going to do a webinar on using the market profile and then putting it all together. Putting it all together meaning, do you have a trading plan? Do you know how to record and track your trades? And also setting up like a daily pre-trading routine. All of those are really important before ever pulling the trigger. So you need to know a little bit more than just how to take a trade. So I do have some information that I'm happy to share with you guys during that webinar. So for now, let me show you a little bit on market profile. Okay, so you're looking at NQ on a 1 minute from yesterday, Thursday the 24th, and this is where we opened, right here in this red bar. And it doesn't matter really what size chart you look at the market profile on. It is going to be the same whether you look at it on a 15-minute, a 5-minute, a 30-minute, a 60-minute. It does not matter. So just depends on the setups that you're trading. So what you're looking at here, the blue area, and this is Ninja 8 by the way, and this is part of the standard package. If you have a lifetime license, it's order flow market profile. It's the name of the indicator. And then there are some out there if you're not using 8. But anyway, just send me an email and I can direct you if you're having trouble finding anything. Okay, so the blue area is the fair value area, and I will go over this in a lot more detail on Wednesday. But basically, our fair value area is telling us where 70% of that day's volume was traded. So as the day progresses, if price starts to spend a lot of time a little bit outside of those areas, you'll see that the value area will start getting a little bit larger. So a couple little tricks with this. So that's the fair value area. Then I've got the VWAP. I'm using the VWAP depending on what settings you're using on your market profile. Yours might be a POC for point of control, but VWAP is volume weighted average price, and it's this little dashed line that you see right in the center here that is blue when price is above it, red when price is below it. So this is fair value area high, this is the VWAP, and then this is fair value area low. And then there are deviations above. I'll go a little bit more in detail on that on Wednesday or in another video that I do before Wednesday. So you can see here, what you're going to find is generally price is going to react at fair value area high, the VWAP, and fair value area low. If it starts moving strongly in a direction, creating a trend, then you'll find that you'll get more of a slope on your fair value area. So like right now from yesterday at this time, you can see it's pretty sideways, no real overall direction. But let's say that we started with a very strong downtrend or uptrend. You'll notice that that will start to slope a little bit more, as will the VWAP. But basically this is a non-directional market at that time. You know, it's also taking pre-market into consideration. I'm using Globex hours. So what you'll find is generally price will trade from fair value area high to the VWAP, and then either from the VWAP it will bounce and go back up to fair value area high, or break through and go to fair value area low. If it breaks through fair value area low, like here, then generally when it retraces, it'll find its way back to the fair value area low. So you can see it breaks through, bounces off the previous day's high and close area, hits fair value area low, hangs there a little bit. So as it's hanging there, a couple things can happen. It can hang there and try to retest the area of support below, or hang there and try to find its way back up to the VWAP. So that's pretty much the best explanation of using those areas. Generally, you're going to find people want to short fair value area high and buy fair value area low unless there is a strong direction. But you still need a reason to buy it, right? Or sell it off of the fair value area high. So you can always look for divergences, or you can look for breakdowns. And so putting the volume profile on your chart can be helpful, anticipating those breakdowns or breakouts. And so here I have a setup, for example, on my 1 minute chart right here. And so if I, take that entry, I would be looking for a reaction at the next area of support based on previous price action, or the VWAP. Then if it gets through there, then I'm looking for a reaction at the next area of support, with the ideal target being down here at the fair value area low. If I want to buy off the fair value area low, I can drill down to a range chart, for example, and look for divergence, anticipating the bounce there. If I want to take a breakdown under the fair value area low, I would be looking for like a bottoming tail or topping tail off of a larger chart like the 5-minute. So let me show you what I'm talking about here. So this is the same view as what you were just looking at, with the exception that this is on a 5-minute. So here's our open right here, and this is the general area where I was looking for that setup on the 1-minute chart. And so I have this 5-minute basically backing up what I'm seeing on the 1-minute. I have these bottoming tails here on the 5-minute. So I would be looking to take that entry. I can take it off the 1-minute, or I can take it off the 5. And there would be a breakdown on the 5-minute under these bottoming tails. Taking it off the 1-minute would be a setup using, the setup that I like to trade on the 1-minute using the super trend stop. Then if you look over here at the volume profile, you can see that we have this opening in volume. So realistically, what this is telling me is that this has a really good chance of moving down to the area where the next high volume node is, which would be, right around this area here at 39, which falls right in line with my VWAP. You can see it right there. Remember, the fair value area and the VWAP are going to remain the same no matter what size chart you look at it on. And then later, and you can see here, we're consolidating here. And if we look at it on the 1-minute chart, that is right in this area right here. I'm going to just mark it right above these bars here. I'm a little off, but that's the same area as what you're seeing on the 5-minute chart. So I already know this is hanging right at the VWAP going sideways, right? So in looking at this, we're thinking, okay, this is either going to hold and find its way back to fair value area low, or it's going to try to break out. So we have a couple little clues here. If you use the double stochastic per our Slinky setup or the 1-minute setup, you can see we get this 40-point gap between our two stochastics. So that's a heads up that price is likely going to bounce. So now couple that with what we see on our 5-minute chart here at that same area right here. You can see it. So that's the same area we're looking at on the 1-minute. We still have that opening in volume, so we would anticipate that if we take that as an entry on our 1-minute chart, that we would likely be able to find our way, worst case, up to the area where this set up for the breakdown, and then best case up to our fair value area high. And then obviously, if you're able to manage it and stay in for the extended move here, then great. But realistically, you'd be looking at somewhere up to the next area of resistance or our fair value area high. And so sometimes just looking at it on the smaller chart, you can fine tune it a little bit. But what I want to show you is once price starts to pick a direction, then you can look for pullbacks to the approximate fair value area high. And so you can see as this popped higher here, as it was grinding higher and giving us new high of the day, it got into this band above us. And so that's the first deviation away from fair value and the second. So once we start moving in a strong direction, what you'll find is then price will generally react at this first deviation, and then next would be above that, right at that second deviation. Usually once it gets in that band, if it's going to continue moving strongly in a direction, it will generally pull back to this first deviation and then continue with the overall trend. If it rolls over again, then we would be anticipating back down to fair value area high, right? So those are generally going to act as support and resistance areas. So like I said, I will go over this in a lot more detail on Wednesday, and divergence is definitely a great way to decide whether you're going to try to, let's say, take a short as it's hitting fair value area high, or take a buy as it's hitting fair value area low. And I'll try to do a couple more videos before Wednesday, but if you're interested, just go to my site if you want to go to the webinar and click on the tab that says upcoming webinar. Okay, you guys have a great day, and we'll chat with you later.